Hi friends, welcome to the accountancy class. Today, in this module, we are going to learn about the term cash flow statement and the important classification of activities. Cash flow statement deals with preparation and presentation of statement of changes in cash flows during a particular period where cash flow means the movement of cash in and outflow of business. Receipt of cash is called cash inflow and cash payment is called cash outflow. Cash equivalence includes short-term or highly liquid investments that are readily convertible into known amount of cash and which are subject to an insignificant risk of changes in the value. That is, short-term marketable securities such as treasury bills, commercial papers, demand deposits, bills, etc. The important transactions involved in the business enterprise are payment of salary, payment of wages, depreciation, amount transferred to reserves, payment of tax, provision for tax, dividend paid, interim dividend paid, final dividend paid, proposed dividend paid, then loss on sale of machinery, profit on sale of machinery, then purchase of assets, sale of assets, writing of intangible assets, purchase of intangible assets, issue of shares, issue of debentures, taking loan from banks or financial institutions, payment of dividend, rent received, commission received, dividend received, etc. These are the important transactions happening in the business enterprise. These total transactions can be divided into three. First one, operating activities. Second one, investing activities. And third one, financing activities. According to Accounting Standard 3, issued by the Institute of Chartered Accountants of India, there are two methods for determining cash flow from operating activities: direct method and indirect method. The total transactions of a company can be divided into three: operating activities, investing activities, and financing activities. Now we are going to learn about what is meant by operating activity and the various transactions involved in the operating activities, that is inflows and outflows of cash under operating activities. Operating activities are the activities that constitute the primary or main activities of an enterprise. The important cash inflows under operating activities are cash receipts from sale of goods and services, receipts from royalties, commission, fees, and revenue. Then cash outflows are payment to creditors or suppliers, payment to and on behalf of the employees, payment to insurance companies for premium, claims, annuities, and other policy benefits, payment of taxes, payment of operating expenses, etc. These are the important transactions comes under operating activities under direct method. Under indirect method, the important transactions come under operating activities are depreciation written off, intangible assets written off, loss on sale of machinery, amortization of goodwill, profit on sale of machinery, any income received, then loss on sale of machinery, etc. These are the transactions comes under operating activities. The important outflows of cash under operating activities are non-operating expenses, that is depreciation on fixed assets, preliminary expenses written off, goodwill written off, discount on issue of shares and debentures written off, premium on redemption of debentures and preference shares, interest paid on debentures and long-term loans, loss on sale of fixed assets and investments, patents and trademarks written off, dividend paid. The important cash inflows are profit on sale of machinery, then interest received, rent received, then working capital adjustments, income tax paid during the year. These are the important outflows of cash under operating activities. Second type of activity is investing activity. Investing activity involves purchase or sale of machinery. The important inflows comes under investing activities are proceeds from disposal of non-current assets, proceeds from sale of machinery, proceeds from sale of land and building, furniture, fixtures, investment, goodwill, patent, trademark, copyrights, etc. The important another incomes or inflows of cash under investing activities are dividend received on shares held as investments, interest received on debentures held as investments, rent received from property held as investment, etc. The important outflows of cash under investing activities are purchase of non-current assets, purchase of machinery, land, building, furniture and fixtures, investments, goodwill, patent, trademarks, copyrights, etc. The net amount derived from investing activity may be net cash flow from or used in investing activities. Next type of activity is financing activity. Financing activities basically relates to changes in capital and borrowings involving movement of cash. Inflow of cash takes place due to issue of shares, debentures, and loans raised. Outflow of cash takes place due to redemption of preference share capital, debentures, repayment of loans, and drawings, etc. The important inflows of cash under financing activities are issue of shares, issue of debentures, money received from banks or financial institutions, proceeds from increase of securities premium account, proceeds from other long-term borrowings, etc. The other outflow of cash under financing activities are buyback of equity shares, redemption of preference shares, repayment of long-term borrowings, utilization of securities premium, final dividend paid on equity shares and preference shares, interim dividend paid on equity shares, interest paid on long-term borrowings, etc. The net amount derived from financing activities is known as net cash flow from or used in financing activities.